This is an interactive video session that will help you to improve the skill awareness of the rights and responsibilities of financial consumers. Having this skill means the person will be able to 1. Understand the role of financial regulation and consumer protection. 2. Recognize the rights of financial consumers in relation to products, services, and providers. 3. Identify how and where to lodge complaints about financial products and services with the appropriate authority or body. 4. Understand the responsibilities of financial consumers. 5. Understand the legal and financial responsibilities involved in acting as a guarantor. In the EU, financial services are subject to strict rules to protect consumers from fraud and unfair practices. These regulations ensure that financial institutions give clear and accurate information about their products, ensure fairness in the services they offer, and protect your personal data. They also prevent misleading advertising, hidden fees, and unfair charges. For example, GDPR, General Data Protection Regulation, protects personal data. Financial institutions such as banks must secure customer data and ensure it is not misused. Another example is the Payment Services Directive 2, PSD2, a European Union regulation designed to ensure the security of online payments and give consumers more control over their financial data. Strong customer authentication, SCA, ensures that online transactions are protected by multi-factor authentication, reducing the risk of fraud and unauthorized access. The financial consumer has the right to get complete, clear, and up-to-date information about financial products and services, as well as basic knowledge upon adhering in order to acquire the skills necessary to make the right choices. The EU Consumer Rights Directive protects online shoppers by setting clear and fair rules. It ensures consumers get accurate information about products, prices, and contracts before buying. Consumers can cancel purchases within 14 days without a reason or penalty. Goods must be delivered within 30 days unless agreed otherwise and must match the promised quality and description. If a purchase is canceled, consumers must receive a full refund within 14 days. This rule builds trust, ensures fair treatment, and promotes honest business practices across the EU. Another example of consumer rights in the financial sector is the Consumer Credit Directive, CCD, in the European Union. This rule ensures that when consumers take out credit products like loans or credit cards, they are given clear and easy-to-understand information about the costs and terms. Emma, who lives in Germany, buys a smartwatch online from a retailer based in Spain. When the package arrives, she realizes the watch doesn't match the description. It's a different model with fewer features than advertised. Thanks to the EU Consumer Rights Directive, Emma contacts the seller and requests a return and refund. Since she is within the 14-day cancellation period, she doesn't need to provide a reason or pay any penalties. The seller is required to process her refund within 14 days after receiving the returned item, ensuring a fair and hassle-free experience. Let's discuss the financial consumer responsibilities. Consumers must carefully read and analyze all information provided by financial institutions before contracting services. Provide accurate information about their financial situation, and act in good faith throughout the process. They are also responsible for complying with the terms of contracts, paying on time, using funds appropriately and ensuring sufficient account balances, updating personal details, and cooperating with the institution as needed. A guarantor plays a crucial role in helping individuals who may not qualify for a loan on their own, typically due to a lack of credit history or a low credit score. By agreeing to act as a guarantor, an individual promises to repay the loan or debt if the borrower fails to pay. This is often seen in situations where a person is applying for a mortgage, personal loan, or car loan. For example, a young person without a significant credit history may ask a parent to act as a guarantor for a loan. Acting as a guarantor is a significant financial responsibility because, in the worst-case scenario, if the borrower defaults, the guarantor is obligated to cover the remaining debt, potentially leading to financial strain or the loss of assets. Therefore, anyone considering becoming a guarantor should fully understand the risks involved and the potential impact on their own financial situation. We hope this knowledge empowers you to stand up for your rights and to fulfill your responsibilities, and we wish you confidence in every financial decision you make.